Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Tuesday, February 6, 2018. So we had a very volatile day today. Before the market sounded, we sent out an email just saying, listen, today's a good day to, we had two low sentiment days. Don't be pushing the short side. We've been saying it really since yesterday. And you got to do it. That's one of the biggest things that I think is the difference between the Bulls and the Bears. Are the Bears aren't pigs. They, if this was the Dow going up this much or the S&P going up this much, the Bulls would come out and be like, we're going up another 5,000 points, just stay long. The Bears they look for support levels and they step out of the way, and then really what happens is you get the people that miss the move that then start shorting the bounce, and this whole thing gets reversed and you start seeing them scrambling. I'm going to take things day by day. It was a great trade on the short side. It was picked up very close to the highs, even if it was 30 points below where the all-time high was or whatever it was. I mean, it was a great drop. That trade, I don't believe it's done, but you know what? I'm leaving things very open-minded right now. There's a couple different things that I showed you in today's report, and I'm going to go over a few things, but I don't want anybody to marry what I'm saying and take it by the gospel. This has to be done like this. This market is crazy. It made a move that was expected. I don't know if anybody expected it to go at the velocity it did to the downside, but we were looking and we were warning that when you get moves that go straight up like this, when it ends, it goes straight down, and that's what happens. So I'm showing you the daily chart because this is what I've been showing the whole time, and I've been saying that the reason why I'm paying so close attention to the 60-minute last five wave to the upside is because when it ends, we're going to get a very deep wave 4, and that's what happened. So when we go to the 60-minute chart, you can see that we had the 5 waves. Once we broke through these levels right around that 28.13, we elected that the wave 5 was in play and to short to be shorting any types of rallies, and this is what happens. So the reason why I'm saying, I'm not sure if this is done on the downside is if we simply just take a look at the technicals here, you can see that we don't have any bullish divergences in place, and the reason why I'm saying don't take it the gospel that we have to come down and break these lows to make bullish divergences, because we've seen too many lows that are made without it. But it's something that if it happened, it would make sense. And the way that I would be looking at it is it's either, okay, let me go to a 15-minute chart because this kind of breaks it down even more for you. So if this was let's just say in a perfect world, in my preferred wave structure, it would be something like this: 1, 2. This was our wave 3. As we can see, it was the strongest move. We are now making an A, B, C to the upside, and we can go all the way up to 27.33, where this would be your wave 4, and then we come down and make a wave 5. When we make the wave 5, that would be your wave A, and then we'd get another sharp counter trend rally. That would be your wave B, and then make a wave C. And then once that happens, this would be, this would be your A, B, C to the downside. But what very well could play out is this is just your A right here. We're not going to get the 5 waves. We're not going to get the bullish divergences. Here's your A, and now we're making our wave B. And, like I said, we could see it go a lot higher to make the wave B. But what it would hint that, at least the way that I would be looking at it, is we still have a wave C that's going to be at the least come down and test these lows and have a chance of breaking them. And if they break to the downside, then we're looking at this 25.35 level, which has been a target all the way. I'm sorry, the 25.33 or down to the 24.65. So this would be your A, this would be your B. We could come to the somewhere up into these levels here, wave C, and then here is your wave 4, and then from there we're going to start a wave 5 that takes out, well, test or take out these highs, but it will, the downside would be pretty much done, and it may be just be volatile until the next top date is in place and we start seeing reasons to look down. But the another reason why I'm showing you this, and why I was really showing the wave 3 and how important it is because let's go to a weekly chart. Remember, what I've been showing you is that once this 5th wave is done, when's it going to be done? When we get a 4 and a 5. So you can see that it's close. This is going to be your wave 3, and guess what? Your next wave 4 can come down to the 2350, possibly down to the 2028, or even down to the 1767 where the previous wave 4 was. So if we go back and we take a look at things, this is what he's been saying, where we could see a 2 to 3 year just drop in the market, and it won't be something that took place in like the 2008 time period. It's just going to be your regular, the market's just not going to go straight up anymore. We're going to see a taste of volatility, and this is what would be this is how I would match the wave structure to what he was saying, where a top in 2018 and then a low in 2021, and that would be someplace here. So that's why I think that what's taken place with this move here really helps explain why it's so important, because we saw that once this wave 5 on the daily ended, this was the next move. Well, the same thing is with the weekly chart, except it's going to go even deeper than what we saw here. So again, that's a long ways away. These 5 waves, keeping them very tight and looking at them, got us short very, very good. When we came down, we started hitting support. Look where where we went down to, right to this support level, and this is one of the areas I've been talking about, and we had a great bounce off of it. So would I be jumping long right now and going crazy? I think that if, depending on your time period, I mean, if you wanted to layer in a long position, the thing, you just have to have I'm trying to keep this G rated. You have to have kahunas. And what I mean by that is, if you are looking to just layer in, what I would do is this: if it pops up, layer in very, very small amount, quarter. If it comes down, lay in a quarter. It comes down, lay in another quarter. You just lay them in at the support levels, and then if it goes below it, you save some some juice for when it comes down here, and you're probably going to be averaged in right in this area. You're going to be down, but again, what you're buying for is this wave 4 to bottom someplace in this area here, and then you have the wave 5 up. Now, again, I'm not recommending that you need to buy tomorrow, because if things are going to play out the way that I think they are, that once we make this top, we're coming down and you're going to get a better buying opportunity, and it could be either down to test these lows here or below them. So my take would be just be patient right now. They have traders jumping all over the place. It's risky to be trading either way, because when we started coming down, I think a lot of people started shorting, thinking we had another crash coming, and now they're some 30 points underwater with their short trade. But I would keep an eye on, if they head higher tomorrow, watch the 27.33. If they continue higher, I know this sounds crazy, but 27.66 by Thursday is not out of the question. And if that happens, then I would say this is probably your wave B, and then we're looking for the wave C to come down and test these lows. Now, again, it's not something that you have to go crazy shorting, because this may, this wave 4 very well may have ended already, but it would have made more sense for us to at least come down, if we especially if we had higher, to test these lows, make sure they hold, and then that gets people on board. It will get a lot of shorts involved because they're going to think that we have another crash coming, and from there they get squeezed, and we make that wave 5 either back up to the 28.72 or even a little higher. So for tomorrow, this is what I'm looking at. Either we are going to come down, test it, make this wave 5. If it comes down, I think this is it could be a very decent buying opportunity down here. What I would look for, if it continues through those lows, that just keep an eye on that 25.35 level. This is the 200-day moving average. Now, if we head higher, I wouldn't, I'd be very careful chasing the long side. Yeah, it could, depending on your time frame, it could be a nice trade if it goes up. But the problem is, most likely this is your wave B and we have the wave C down. So I wouldn't really be too anxious to be jumping in on the long side if it comes up here. If it comes down, then you look to, you have that little net down there and you start layering in, and then you're looking for that move up. If it goes up, I'd also be very careful shorting, just because this was the move right here. If it comes up, like I said, there's so many different ways that this can play out that you kind of want to let the dust settle. The trade on the downside was great. Right now, let's see what happens up here. I think if it comes back down to these levels or lower, that's when you want to be looking to buy. If it comes up here heading into Thursday, then depending on your time period, maybe you dabble on the short side again. But it's the easy money's done. I think that the next move on the downside, no matter where it tops up here, is probably going to set up a pretty good buying opportunity, and from there we'll most likely just ride it higher. So with that, let's see what plays out tomorrow. 27.33, 27.66 are the next important levels if the S&P can get above this 2,700 level. So with that, have a great night, and I'll talk to you guys in the morning.